Welcome to Trading Nation. I'm Mike Santoli. Tech making a comeback this week. The QQQ NASDAQ 100 ETF rallying more than 3% since Monday with names like Broadcom, PayPal, and yes, even Facebook moving significantly higher. So now, is it safe to get back into tech? Bill Baruch of Blue Line Futures, Michael Bapis of Vios Advisors at Rockefeller Capital join us to talk about that. Bill, get us going here in terms of the overall setup for how the sector looks. Obviously, it was a huge outperformer, actually still outperforming, but with a lot of pain along the way.
Yes, it was also the most constructive one on the most recent pullback. If you go back to October, we had what I look at as a left shoulder being put in, and then we had that Thanksgiving low where the NASDAQ was the only index making that severe low above the major three. And then it actually was the most constructive here, making a right shoulder. I'm looking at an inverted head and shoulders pattern, which can be very powerful to the upside. Right now, if we get a close above 167 today, I think there could be further tailwind in the very near term. Fundamentally as well, obviously the Fed next week I think could be something that brings that tailwind up where the real battleground is going to be at 170. That could be the breakout. You have the 200-day moving average there. And if we get above there, we're looking for a really strong rally right around Christmas and after that Fed meeting next week. But ultimately, too, to the downside, I think we can't ignore what the Dow Jones did. And the Dow Jones held what I'm calling a generational line in the sand with the 200-day smooth moving average. That's what really kind of helped this market find that bottom. And now tech is going to be the leader and take the reins.
All right, so it's contingent, but looking like the pattern so far is constructive. Michael, on a fundamental basis, did this whole pullback give you a chance to look at some new merchandise in tech?
Yeah, it definitely does. I mean, we do believe there is a rotation within this sector, going from high growth names, from super high flying names into tech with earnings is what we call it. So we do believe it's going to focus on earnings. It's not going to go up. Everything's going to go up. But we are also in the middle of a technological revolution. I mean, we're going to look back in 200 years, 300 years and say, wow, look at that era. And I don't think it's ending anytime soon. So we like the names. We like this sector. There is a lot of headline volatility that's affecting it for no reason. That will pass. Let's go back to the tech names that everyone's forgotten about. Microsoft, Apple, Intel. These companies are trading at low multiples. They're generating a high amount of cash. They're growing their earnings. And they pay a little dividend that's keeping up with the treasury yield. So, look, we love the sector. It is going to be a stock picker sector. Everything's not going to go up, but we definitely believe you need to own it going forward.
All right, Microsoft, Intel, Apple. So all the good tech stocks were built in the 1970s is what I'm getting from you there, Michael. Appreciate it. Bill, Michael, thanks a lot for your time today. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.